Hello. So, today we're going to be going over Bitcoin. It's going to be a broad overview of Bitcoin. It's something I wanted to make for friends and family because I've been having a lot of people ask me lately, and the intricacies are so eye glazing. You start talking about it, and people are like, oh, I've lost interest very quickly. So, I wanted to try and do something a little bit more summarized and organized as best I can that gives a nice brief overview without being too technical. I do apologize for any of the lingo that it comes out of me that you may not understand. It is hard to remember, for me about 3 years ago when I didn't know what hodling was and what smart contracts were and how protocols worked and how the blockchain worked. All these things that I understand now and have moved on from it, when you talk about it, you kind of forget that not the masses don't know it. And it's not like there's any kind of I'm better for knowing it. It's just information that I wish you could have. So I wanted to convey it as best I could. Now, when I was writing notes to kind of get this video planned out, I realized the notes were pretty good just the way they were. And I thought, hey, I'm just going to scroll down the notes and talk about it as I come to each note individually rather than kind of have that off screen and try to pick and choose, or whatever, find my spot, this and that. So let's just go ahead and get into it. Bitcoin was created by Satoshi Nakamoto in 2008. It was a response to the recession. Satoshi Nakamoto is not a real person. It's a pseudonym. It's whatever the username of whoever or the group of people. It could be cypherpunks. Nobody really knows that answer that put it out. And when they put it out, it was the Bitcoin protocol, which was built on blockchain technology. Now, the protocol itself is different from the blockchain, but this was the first time blockchain technology was introduced to the world. It was used as the transaction ledger, which is very important because it is pretty much the backbone, the security of Bitcoin. Now, being that it was created by this fictitious Satoshi Nakamoto, whoever, that put it into creation, there's nobody at the helm. This is a protocol that is just going forward, and that's what creates the decentralization. And that's what I'm all about. I've always had a problem with banks and their rules and 401ks and their rules. I'm like, that's my money, and if I would like it, I should be able to get it. And those interest rates are ridiculous. How could it go from 4% to 29% at the end of the year? That's just trickery. That's just hoping you forget. And it always felt deceitful. So running into Bitcoin and into cryptocurrency in general and the decentralization was really a huge point of why I think this is a good situation and you should be paying attention to it. So for a while there, people were chanting in the streets, blockchain over Bitcoin. And that was by major banks and big money players talking about blockchain technology is fantastic, but Bitcoin is not. The whole time they were accruing Bitcoin in the back end, and that's been proven now. So, and that nobody talks about that anymore. Bitcoin and blockchain are both fantastic and should be utilized. So why the blockchain is important, and you need to understand that first and foremost, is because it's immutable. All right, you can't hack this. You imagine, that hackers are talented people, and that they would have all these different skills. But no matter how good you are, until quantum computing is readily available, you can envision it by this. You see all these different blocks, right? Well, every block is an algorithmic puzzle that is needed to be solved by all the computers involved in the blockchain. Just by buying Bitcoin, you're downloading the ledger onto your computer and you're becoming a node. That's why it is so hard to crack, because I have a node. All my friends that own Bitcoin have a node. And if you get involved, you would be a node as well, backing up the security of the ledger, making sure that you have a verified copy. But so the ledger is just an itemized information about the blockchain, and each block takes about 10 minutes to close. All these computers around the world are trying to mine them, solve the puzzle fast enough. And the best analogy to use to describe that is when you're building a puzzle, it takes you 2 hours to finish a 1,000-piece puzzle, and then you take it to your wife and say, hey, I finished the puzzle. She looks at it and goes, yes, you did. It takes a long time to complete the puzzle, but once it's done, the verification is instantaneous, which shuts the block. The next block begins. and the miner that solved the block gets a reward. I'll describe those rewards a little bit later. But so like if a hacker were to try and get in, then they would try to hack through the first blocks, the second block, the third block, whatever block they can get through. And before they can get to the Genesis block, the first block ever, there's more blocks. And so you can't hack it, if you understand what I'm saying there. So security-wise, the blockchain is unbelievable, and expect that technology to take over most markets. Just as a backend. I mean, you're going to have everybody wanting to track their flow as they always have, using outdated systems that are easily manipulatable. This is not. Scan, done, in the blockchain, can't touch it. I mean, it's the future. So you want to pay attention to things like that. So hopefully that you understand where I'm coming from with the blockchain there. So now, when this protocol was issued, there are only ever going to be 21 million Bitcoin mined. Okay, let that sink in. 21 million Bitcoin, and that's it by like 2041. And I'll describe the halving later. That's more confusing stuff. But like I said, this is really the mainstay. 21 million are all that will be mined ever. Okay, 18 million have been mined already. Every halving event that happens about every 4 years, it cuts the issuance in half, so you're getting less Bitcoin. So with 18 million mined, there's an estimated 4 million lost. So from 2008 to 2020, I'm fairly confident there is a computer out there that had Bitcoin on it, or at least, the passphrase is to get to said wallet, to get the Bitcoin, and that computer was burned in a fire, or that computer was stolen by people that didn't understand what they had, or all these different options here where it's gone, it's disappeared. That's never coming back. Nobody can say, well, we think with this many were gone, we'll reissue them, because nobody's at the helm of this train. So with 18 million mined, estimated 4 million lost, that only puts like 14 million in the market. With we're going to be at 21 million by 2041. So like the bulk is out there, and people are just now getting to know it, and they're going to want it. There's more than 21 million millionaires in the world. So if every millionaire decides, I'd like to expand my portfolio and buy 1 Bitcoin, they can't, because I have some, and you should, why not just diversify your portfolio if you're into this kind of thing, with a little bit of Bitcoin, like 1%, 5%, that little bit amount. When you're talking about the estimations going from right now, a Bitcoin is $10,000, from going from a $10,000 Bitcoin to $100,000 by the end of 2022. And that's a conservative estimate. They're talking about $100,000 maybe by 2021. I'm not that optimistic, because I don't think people understand this technology. But once they do, they will join in. 2022, 2023, it's a deflationary asset. And that's what I'm going to get into now. And so if you followed up till now, you can download Coinbase, you can download Cash App, you can download Voyager, all these different, I use all these different exchanges to buy Bitcoin. You just connect your bank to it, you do something called KYC, and you're just kind of like sending your ID over, proving who you are, so that you can have this wallet identified to you. And in the decentralization world, a lot of people faux pas about this, but it's adoption. If the majority of people are having trouble understanding how the blockchain works, and you want to get to like extreme decentralization, we're not there. Okay, we gotta, in order to make the moves to the mass public, it needs to be verifiable that that's my wallet. I want that wallet. That's my wallet. It needs to be. That I'm getting on a tangent there, but so either way, I'll have links below on how you can get each one of these different exchanges. You connect your bank, and you just buy a little bit, dollar cost average in, and I'll get into that later. So next up, we're going into the halving. Now the halving is an event that happens every 4 years. And it's built into the protocol. And it's give or take every 4 years. I think it's 2016 blocks are closed, and there's about a block closed every 10 minutes. So that is how they come to like the 4-year range. And it does, if we estimated now when that 4-year range would be, if we said May 20th, it would probably be the 14th or maybe the 23rd, depending. So, but just to go on. So when Bitcoin first came out, to close a block, a miner would have to use its computer power and solve the algebraic equation. And once it did, it would be given all the transaction fees as well as 50 Bitcoin. Okay, 50 Bitcoin is what it was given for 4 years of people mining it. That equates to a lot of money today. The first block was mined on January 3rd, 2009. It was block number 0. Embedded in the block was some text that pretty much time-stamped it, as well as gave homage to the instability caused by fractional reserve banking. I didn't actually write down the text, but it's a headline from a Times article that describes the recession at that time, which I always found was interesting. So, and then it was issued in 2009. In 2012 was the first halving. So all the miners in the world that are doing their best to try and get Bitcoin and occasionally getting 50 Bitcoin were now only going to be given 25 Bitcoin. 25 because it's a halving. It halves the issuance. So at 25 Bitcoin, they were only $12.22 at that time in 2012. So in July 2016 was the following halving. Okay, that went down to 12.5 Bitcoin, and at that time it was $657 a Bitcoin in 4 years, $12 to $657. I am researching hard to try and find any reason why this wouldn't work. And aside from quantum computing, which for some reason nobody seems to be too afraid of, there really is. It's immutable, like I said, very difficult to break. So in 2020, in May, what just happened was the next halving, and now it's 6.25 Bitcoin, and that happened at $9,000 a Bitcoin. $657 in 2016, in 2020, 4 years later, $9,000. Where do you think it's going to be in 4 years? And what are investments but things you put to hold away for a little while and then take the profits from it? When you look at something as clearly profitable as this, it's hard to imagine what you would want to do. So to explain how a deflationary asset works, which is what Bitcoin is, supply and demand, as you can see over there to the right, are constantly competing. And where they land, where the people trying to buy it up and the people trying to sell it are agreeing on a price for the most part, that's your price. That's how the markets work on the most base level. Okay? So before the halving that happened in May of this year, last month, before this happened, 1,800 Bitcoin were issued per day. 1,800 Bitcoin. Okay? And then that was just given to the miners. On top of that were the sellers selling their Bitcoin. Demand was buying that Bitcoin at 9,000. So when the halving happened, it went down to 900 Bitcoin per day. Okay? Same amount of sellers, give or take. I mean, there's going to be, doesn't matter. But there's the same demand. So when you see something that is like, supply and demand are constantly fighting, and all of a sudden the supply goes down here and demand's up here, where do you think it's going to go? I mean, it makes perfect sense. The guaranteed finite amount, while our dollars are being printed every day during this time, and you know what time I'm talking about, this is a crazy time. And they are printing like crazy and buying junk bonds. And that inflates the dollar. Your savings is going down. Your dollar value is going down, while potentially Bitcoin could do better. So there'll only ever be 21 million Bitcoin. And right now you could potentially own some of that. So I'm going to go on a little bit here. That describes more of like kind of the urgency. FOMO is a real thing. It stands for fear of missing out. It's how I got into Bitcoin back in 2017. It was going up to $20,000 a coin. At the time I saw it, it had jumped from like 4,000 to 9,000 in absolutely no time. So I downloaded Coinbase. Downloaded Coinbase, bought some at 11,000. We're still not there. And I took that hit because I started looking into it and understanding what it is. And I was like, I'm just going to keep it, I have dollar cost averaged my way in since then, and Bitcoin went down to $3,000. So I was buying small amounts at 3,000, and then it came up to 6,000. I was buying small amounts at 6,000. So it all adds up over time. And that's what you have to do. You can't make a quick buck on this. If you want to try, good luck. But that's not the name of the game. And that's not what I'm advocating at all. I'm advocating a long hold. A 4 year till the halving is just an understatement. You think 10 years from now, if it is the leading currency and people are spending Satoshis, which is the small amount of Bitcoin, if people are spending Satoshis at every store, and I was just chipping in a little bit, I'll only chip in what you can afford. I'm only chipping in stuff I could lose. I don't think it's going to go to zero. I don't know why, how it could ever, but I still don't put all my eggs in that basket. You always want to be diversified in every aspect of life. Your income streams to your investments. I mean, 100%. Well, not 100%, diversified. But either way. So, what I wanted to get to was just recently is the stock to flow model. Now this, like I said, thank you for watching. Like, subscribe, that kind of stuff, because I'm getting way more into the technicals. But if you're along this far and you're enjoying yourself, then I'm going to go into a little bit more of charts and things along those lines. So one of the charts that because I think about the long haul of this situation, is the stock to flow model. And the stock to flow model, as you can see, is showing the how the stock to flow goes. And when it's in the red is usually the beginning of what is called a bull run. And so as it goes up, these are your all-time highs. These are your all-time highs. And when I'm talking about halvings and 600 and whatever that was, 657, that was here, usually right around here in the green to blue, and then things start to turn red and go crazy. Well, we just had our first red dot. So, it's kind of why I'm getting a little bit more aggressive with my rhetoric in the sense, because, it's, again, a long haul. You got to wait. That duration to get to that all-time high is over a year. But that entire duration is positive growth. So, I had written down here something I wanted to focus on, but you could see it, they go from the halving to the all-time high, and go from the halving to the all-time high, and go from the halving to the all-time high. You would think that's where it's going to go. So that's just the point I wanted to make there. Another important point I probably should have covered early on is that Bitcoin is fractional. And so you don't have to buy a $10,000. Like, boom, I want one. I'm finally getting in, I'm going to buy one. No, you can buy 0.02. You can put $50 in every other week and slowly accrue something before the rest of the world does. The estimation is 1% of the world owns Bitcoin, and there is a trust called Grayscale that's buying 1.5 of the Bitcoin mined in a day, buying every bit of Bitcoin mined in the day and buying 0.5 over that. They own so much. And you can invest in that trust as rich people do. But you can just download Coinbase, download Cash App, download Voyager. Any one of those are great. Cash App has a lot of back end scams going on that you want to avoid. But on the front end, if you use it like it's supposed to be used to transact between your acquaintances that you do know well, then Cash App works just fine. And you can do recurring buys on each one of these apps. You can say, I want to buy $50 a day. $50 a week, and it'll reoccur buy for you. And you just got to keep, you'll have $50 in your account, hopefully, and it'll do it for you. I personally enjoy it. I enjoy messing in the exchanges and trying to find somewhat of the lows and highs. I still dollar cost average, but I play around as well, at least when it's at this low point, about to go, in my opinion, much, much higher. So when you get involved in these types of applications, there is the KYC element, which I mentioned earlier, and it stands for Know Your Client. It's a cornerstone of crypto, and like I said, I'm not one that's against it. A lot of people that say cryptocurrency is decentralization, and that to verify who you are and give your ID, like you got to send a picture of your ID or your passport to these things. It's totally justified, in my opinion. I don't like it. I mean, of course, I'd rather just them trust it, but where are we in the world? You need these kind of verifications to say that's my wallet, that's my money. It's considered an asset on taxes, so you will have to think about that when it comes that time. But because I had such an even amount of investment to gains, all I had to say for my taxes was yes. Did you buy any cryptocurrencies in the past financial year or whatever? Yes, I did. That was as easy as that. When tax time does come, Coinbase, for example, Voyager, I'm not so sure about Cash App, but they have to. It's a simple file that you can pull out. It's confusing to talk about in the sense that it's a CSV file, but the taxes will ask for the file, and you'll go to Coinbase and say, "Where's my CSV file?" And they'll say, "Here it is," and you just input that into your taxes, and it shows, and it's that easy. But you do have to take these things into account if you're going to get into this kind of thing. That's pretty much it. That's what I've found so far, and I love it. I'm going to go through and define a lot of the things I went over today in other videos as well. I just wanted this to be kind of like an all-encompassing, like, bam, there it is. If you paid attention this far, congratulations. You know more than most of the world, and there's so much more to learn. I do own multiple cryptocurrencies. Bitcoin is my mainstay. I also own some stocks. And like I said, I highly recommend you diversify. And I'm open to any questions, anything you want me to look into. I absolutely love the space. It's a fantastic time in technology to be able to be a part of the growth and be able to say, like, you can see the future a little bit. I was being paid 20% of my salary in Bitcoin sent to my wallet, and then that wallet was connected to what's called a BitPay card. That was pretty much a Visa prepaid card that pulled from that wallet my Bitcoin. So I could use Bitcoin straight away. I could go to the gas station, get gas, swipe the card, and have used my Bitcoin as currency essentially through a couple different changes. Now, that technology is new, and I'm doing it because it's fun to live in the future, but the amount of transaction fees between point A and point B aren't really worth it. You're spending an extra $3 or $4 a transaction. So, but it does show, and I can attest to that it will work. And it's just a matter of fine-tuning everything. So, like I said, I really appreciate you hanging out. Like, subscribe, do whatever you do, but especially enjoy your day and stay as safe as possible inside, outside. Don't go outside. Bye.